Welcome to Personal Finance 101. In today's video, we're going to talk about how to refinance your house, your home today and get up to $100,000 in savings. If you refinance your house today, you can save up to $100,000. In this video, we're going to explain to you how you can do that. My name is Franz. I'm a real estate broker for more than 20 years. I also have a master in business administration. You are listening to Personal Finance 101. If this is your first time, subscribe to us, please. And if you like the video, please give us a thumbs up. A lot of you reach out to me about a video that I did the last time. I got to tell you, all our videos, the links are below. When you look at in the description of this video, you're going to be able to see some interesting links that we have below for you, for your own good. So a lot of you contacted me and were asking me questions about how to save, the advantages. The video was about the advantages and disadvantages of refinancing a loan. A lot of you were asking me questions about how to save more money. So today I'm going to explain to you how you can save up to $100,000, sometimes more. It all depends on every person's situation. Depends on when you purchase the house, depends on what the rate you have in the house, depends on the term you have in the house, depends on if you had PMI or not. I'm going to explain all that in a few. The first scenario we have here is somebody who purchased a house back in 2010. They had an original loan for $300,000 with a term of 30 years from 2010 to 2040. They had a 6% interest rate. Today in 2020, they have 20 years left in their loan. And they came over and they said, you know what, I would like to refinance that loan and get a 30-year with 2.5% interest rate, 1 point up front and $4,000 costs. In that particular case, I'm going to show you exactly how much money that person will save in payment, in term, and also in interest rate. Remember, there are three important factors when you refinance a loan: payment, term, and interest rate. In that particular case, that's what we have. So we're going to click calculate here, and you're going to see how much that person is going to save. So this is what we get. They save $816 on their new loan in their payment per month. They save $78,000 in the lifetime of the loan. The upfront cost, which is $6,000, will take them about 8 months break-even points. Will take them about 8 months for them to get that money back. The term of the loan, 240 months. That was left on the prior loan. You see current loan remaining. The new loan, this is what you're going to get. Your monthly payment actually was $1,798. The new payment will be $982 for a saving of $817. Total payment for the term of the loan, for the lifetime of the loan, payment will be $431,000. And the new loan, $353,000 for a saving of $78,000. The same scenario, the same person that we have right now, if we have changed the 30 years and put it for that person for 20 years, this is exactly what you will get. That person, if they go instead of 30 years, they keep the same amount of month left. Same for same. The original loan for 240 months left. We go and we give the same loan, 20 months for 240 months left. Interest rate goes from 6% to 2.5%. Savings on the interest rate is 3.5%. Payment, $1,798, goes down to $1,317. Saving on the payment per month, $481. Total savings on the payments right there, black and white, $115,000. I wanted to explain it, to show it to you so you can understand the advantage and disadvantage of refinancing, and to show you if you refinance today, you can save $100,000 or more. maybe less, depends on the term that you choose. Three factors that are important in refinancing. The interest rate, in this scenario, it goes from 6% down to 2.5%. The second thing is the payment, the monthly payment, from $17.98 to $13.17. And the third one is the amount of months, 240 months left, 240 months mortgage, new mortgage. Same thing. How much does it cost? $6,000. It will take about 13 months to get your money back. If somebody say, you know what, I don't mind, I can pay the same, give me a 15-year, let me see if how that's going to affect my payment. We can change here and we give them a 15-year. The lowest we can do is 15 years. So for the same scenario, if we put 15 years, this is what we get. The person saved more money, $133,000. The payment remained about the same. They still save $141 per month in the payment. And the term is 15 years. In that scenario, you save 5 years. You see, saving 60 months. You save 5 years plus $141 a month saving. That money, you can take it and invest it in an index fund, for example. And also, you save in your total payment of $133,365. Refinancing is not for everybody. Refinancing is, you need to look at your numbers. You need to look at what it is that you're looking for. If you're trying to save in your payment, if you're trying to save in your interest rate, or if you're trying to save on your terms, those are the three key factors that you got to analyze every time that you refinance. The purpose of this video is to show you if you refinance some property today, you can save $100,000. This scenario, remember, for somebody that purchased a house in 2010. So let's say somebody purchased a house, same scenario, $300,000, 30-year term, and instead of 20 years left, we're going to put there 22 years left. They refinance 20 years. Same scenario. We calculate. This is the exact answer that we get. This is the principal that they had left. This is what they're refinancing. 264 months left, 240 months in the new one. They're saving 24 months. $417 a month savings in the monthly payment. But the total payment they save is $143,000. If you are comfortable with your payment, get a better term. Reduce the amount of months left. In that case, we can change here for you and reduce this to 15 years. If you reduce it to 15 years, that will allow you to save $60 a month, but you save 7 years in your mortgage. If you think this is good for you, this is the opportunity to refinance. This is the time to refinance. This is the best time to refinance because those interest rates are low and the lowest we ever seen. Let's do another scenario. Let's say somebody purchased a house in 2015. So they have 25 years left. And if they decide to refinance and get, let's say, 20 years. Let's say they didn't have a 6%, they had a 5%. We can play with this and change everything we want. They still save money. They had 300 months left. They refinance on the 240 months, which is 20 years. The interest rate goes from 5 to 2.5. They save in the term of the loan $136,288. I give you different scenarios so you can see the importance and how you can save money if you decide to refinance today. The decision is yours. Nobody else can take the decision for you. This is for you to make that decision. I'm showing you in this example, CNN business mortgage rates have fallen to a record low for the 9th time this year. It's an article that came out on September 10, 2020. See here, mortgage rate fell to yet another record low according to the weekly survey of rates. The average interest rate on a 30-year fixed mortgage fell to 2.86% this past week, according to Freddie Mac. That's the lowest level in the nearly 50 years of the Mortgage Giant survey, the 15-year fixed rate dropped to 2.37%. Everyone's scenario is different. Every person has a different credit score, a different income, a different debt ratio. Those are factors that they're going to use in order to decide how many points they're going to charge you to get the refinance done, and also what interest rate you're going to get. If you go for a 15-year, you can get a lower rate. So for a 15-year, you can get a 1.99, you can get a 2.5, a 2.9. It depends on your situation. For a 30-year loan, you're going to get a higher rate slightly, depends on your situation. If your credit score is higher than 720, you have a better chance to get a lower rate. If your debt ratio is excellent, you got a better rate. And you got to remember also, there's the factor of the equity in the house. If you're financing a house today that's worth $500,000 and you need $300,000 mortgage, it may play better for you because you're only refinancing 60% of the value of the house. Those are the key factors. Remember, interest rate, payment, term. Now, what interest rates you're going to get depends on your credit score, depends on the equity in the house. Equity is the value, the difference between the value of the house and the mortgage that you have, how much money you own in the house. If the value is $500,000, if you own $300,000, the equity is $200,000. Also, when you're refinancing, if when you purchase the house on the first time, you had what they call a PMI, which is a private mortgage insurance. Whenever you don't put 20% down in a property when you purchase it, the bank force you to purchase an insurance to cover their mortgage. It's called the private mortgage insurance. You can get rid of it if the loan go lower than 20% in some circumstances. If you want to get rid of your PMI, you will save even more money if you have more than 20% in your equity. Everybody is different. Every scenario is different. Every circumstance is different. To find out more, you can reach out to us and we'll be glad to give you more information. This is Franz. You are listening to the Personal Finance 101, and today's subject, we cover refinance today and save $100,000. Thank you for listening.